Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with Mr. Jonathan Twomley. How you doing, sir?
I'm doing great, Michael. How are you today?
I'm doing very, very well. For the folks that don't know, and folks, Jonathan has an entire playlist here, probably 200-300 hours of material. Jonathan, remind people what you did for a living before you were an real estate investor.
So I was a commercial litigator. So I was litigating, basically defending Fortune 500 companies in like massive litigations on commercial issues. And then later in my career doing hotel related litigation. So I spent, 12 years working on court cases in the commercial space.
Yeah, and the reason I wanted to get that out here early is we're going to talk about LLCs, how to use them, why not to use them. There's always it's an interesting concept because there are opinions about them, like, hey, just get a bunch of insurance, do this, do that. It's the same. Talk about piercing and all of that, but where do you want to take this? Because again, you've seen some stuff in my group this week.
Yeah. So the thing that spurred this was this morning I saw a post in your group where somebody posted about don't get an LLC because it's worthless because the courts will just pierce it anyway. And this is a conversation that raises its head every couple of years, right? Creates a whole bunch of confusion for people. Right. And there's always people who there's some guy out there who wants to make a name for himself or get attention by saying, don't get an LLC. And of course, the reason for this is because they're like, oh, go buy your $1 million asset, but save yourself a couple $100 by not getting an LLC because you don't need it, right? Just stupid stuff. I mean, I'll just call it out as being dumb. No, but so I want to talk about sort of the differences between LLCs and insurance. Yep. Why you want to have an LLC, why insurance alone is not good enough, why you actually need both because they serve different purposes. Yes. Why you don't also want to just shove everything under one LLC because it defeats the whole purpose of everything. Yep. Right. And also I want to dispel this myth of piercing the corporate veil, right? And when that would happen, right? And it's very unusual. So first let's talk about sort of what an LLC does, right? And why it's one half of a two-pronged risk mitigation strategy that includes insurance, right? So an LLC is a loss stopping mechanism, right? So basically it caps your losses at whatever is under the LLC, right? So it is, and just so you know, it stands for limited liability company. I think that people, if you even looked at the name of it and people just don't even bother to look, these initials, they don't even think about what it actually means. It's a limited liability company. What that means is that your liability is limited to the company's assets, right? You cannot, if somebody has a claim against the company, they cannot, that's it. They're stopped at whatever the assets of the company are. Now, this is important because you don't want people to, let's say you own a house or you own an apartment building, you have a slip and fall, right? You want to know that the worst thing that can happen is they can take that house from you, right? But they can't go and get into your bank accounts. They can't go after your personal residence. They can't go after your other, homes that you own, your other investment assets, whatever, right? You're just, the deal that you've made with society when you form an LLC is like, hey, you plaintiffs out there in the world, this is all you can get. And everybody who knows that they're dealing with an LLC also knows this is all they can get, right? Now, an LLC doesn't, if somebody, let's say, has a slip and fall at your property, it doesn't pay you, right? It doesn't cover your costs. You may have legal fees associated with it, so you have additional sort of liability there, but it does mean that the worst that can happen to you is you lose the house plus whatever legal fees you incurred fighting this, right? Insurance is different. Insurance does a couple of things. It will, if there's a judgment against you, it will pay the judgment to the plaintiff. So then you can, instead of handing over the keys to the house, the insurance company is going to pay for the judgment, right? So you get to keep the house, right? And it also will pay for your legal fees in defending that suit, right? Now, there's a lot of people out there saying, well, you know, you don't need an LLC because you have insurance, right? Well, the flaw there is, so they're saying, oh, you have $1 million property, you got $1 million of insurance, all is fine with the world, right? Here's the reason why that's not true. Every insurance policy you buy has a limit of how much the insurance company will pay. And that is assuming that the first thing the insurance company is going to do is try to tell you that the claim doesn't fall within your insurance at all.
They're going to try to
right?
wiggle out for
Right.
sure. Yep.
I mean, depends on, this is also why you want to buy good insurance. I'm sure that these people also tell you, oh, just get the cheapest insurance, it's all the same. That's also not true. The more expensive insurance companies don't do that to you because, well, you've paid them more money, right? So, but the cheap ones, that's how they make money, because they're not making it on premiums, they're making it by not paying claims.
Right.
Right. So but let's just say, right, you've got your $1 million of insurance. That's all you've got because you listened to some guy who said you just need insurance. You have your slip and fall case, and guess what happens? The judgment against you is $2 million, right? Your insurance company says, okay, Mr. Plaintiff, here's your $1 million check. And then the plaintiff says, okay, now I'm attaching your personal assets for the other $1 million, right? Now, if you had an LLC, they can't do that. If you have an LLC, it's like, well, you know, maybe they could attach the property too. Maybe the better example is a $3 million judgment, right?
Right.
So, because you've got the $1 million house, right? So you've given them the insurance proceeds, you've given them the house, and they've still got $1 million out there that they can come after, right? Right. So, and that's going to come out of the rest out of your pocket, right? The LLC is going to say, well, you know,
done.
All they can get, it just stops at whatever's under the LLC, right? So you're still out your $1 million, right? But you're not out 2 million. You're not out 2 million or 5 million or 10 million, right? Depending on how egregious the case is.
Yep.
So the insurance, you know, pays for the judgment up to the policy limits, but then the limited liability stops your further losses, right? There's a stop loss mechanism, right? Okay, so hopefully everybody understands that. You know, you've got the two halves of it. So the insurance will make you whole, right? You won't have, say if it's within the policy limits, then you get off without paying a penny. But if it goes above that, you need the LLC as a stop loss. Now, what I see people doing, or at least saying they should do, or arguing that you should do, is they believe that an LLC is some kind of like magical thing that kind of like, it's like a get out of jail free card, right? And they're like, I gotta have one, so I put all my houses into an LLC, right?
Yeah, you see that all the time, and maybe yeah, go ahead, sorry.
Yeah, well, I mean, you know where this is going.
Yeah,
you might as well not have an LLC. There's absolutely no point to having an LLC in that situation, because as I said in the beginning of this conversation, a plaintiff can reach anything under the LLC. The LLC protects what's outside the LLC. It doesn't protect what's inside the LLC. It protects what's outside the LLC. So if you have gone and put if the majority of your net worth is in houses that you own, and you've gone and put them all in the same LLC, you've basically exposed all of them to any creditor against any single one of them, right? And you actually multiplied your risk many times over, because just on a probabilistic basis, right? Let's just say you've got 20 houses, right? That means your chances of somebody suing you are 20 times higher than if you got one house, right? So if you put them all in the same LLC, you've now just, you know, increased your risk of having a big loss, right? That exceeds your policy and your policy by 20 times by putting them all under the same LLC, right? So remember, the LLC only protects what's outside the LLC, not what's inside. What's inside is exposed, what's outside is protected, right? So that's why, say in commercial lending, when you do commercial real estate deals, you are required to put each asset into its own LLC, right? So because that you don't, the lender is not just like concerned, they want to be able to collect the rest of your assets from you. They don't want to go into a plaintiff, right?
Correct.
If a plaintiff comes and takes away that asset, they still want to be able to recover against the rest of your stuff, right? So they know how this, you know, asset protection works, right? Which is why that you're required to have a separate LLC for each property, right? And that's a good practice. Now I understand that people are worried about the expense of it, you have to file tax returns. There's things that come.
Yeah,
that come with
there's
it.
one thing I would, because again, we play at different levels, right? In the residential space, especially if you're buying 50, 80, 100K houses, it really doesn't make sense. What I tell people is, how much equity do you want to put at risk? And for many folks, it's going to be more than one house, right? So it doesn't make sense in the residential space in many cases. But you've got 20 properties. Do you really want to put all 20 at risk? The answer is probably no.
Right. So you do want to have some risk mitigation. I understand the expense issue. So you might want to break them up into a couple of different LLCs.
Whatever you're comfortable with. That's a individual. Like, is it like, again, don't think what a lot of people think is they count them. It's 20 homes, like in my example. It doesn't matter. It's how much equity is in it, right? Right. Is it, have you laddered up everything to 105% and there isn't any equity? Well, maybe that's one answer. Are you sitting it all free and clear? Well, that's probably a different answer, or it's certainly a different answer. Right. It's about the equity position of that entity, because again, everything underneath that umbrella is at risk. Heaven forbid something should happen.
Right.
So definitely think about those things.
Yeah. So there is a certain cost benefit analysis to this, but the important thing to remember is that, again, if you want to have assets that are not reachable, then they have to be outside the LLC. And if there's no LLC, then there's nothing. Then everything is inside the LLC effectively, right? So there's no difference between you and your assets. So, did you want to?
Yeah, I was going to say one thing we should definitely talk about, because there are some I don't know what they are, rules or guidelines about how to treat and how to act when an LLC is there. Back to the kind of the threat or the fancy word of piercing the corporate veil. The corporate veil. So let's talk about some of the rules of the road to make sure that doesn't happen.
So that's what I actually was. So that's where I was actually going next. So now there is this scaremonger tactic out there that says, oh, you shouldn't, for people who want to make a name for themselves, oh, you shouldn't have an LLC, save the money, just get insurance, because the LLC is worthless because courts just pierce them, right? And piercing the corporate veil is a fancy way of saying the court will ignore the fact that you have an LLC and go after your personal assets. Now, this can happen.
Oh, for sure.
However, it can happen. And I'll tell you when it happens and how the gurus are actually responsible for this, right? But so it can happen, but so the thing you have to understand is that there is a legal presumption that an LLC is valid. And what that means is, for anyone so if a plaintiff comes and says, I want to pierce the corporate veil, the burden is on them to prove that the corporation or the LLC was a sham, right? So that they're going to have to prove that, right? So there's already a presumption against that, right? The court's saying, we're just not going to pierce the corporate veil because you said so.
Right.
Like you, Mr. Plaintiff, you're like, I don't like my $1 million insurance settlement. I want more. And you just say, pierce the corporate veil. And the courts are like, oh, okay.
Yeah, why not?
And it doesn't matter, as somebody said in that post, if it's a single member or multi-member LLC, right? It doesn't matter, right? An LLC is an LLC, and the presumption is against piercing the corporate veil. Now, however, if they are able to bring enough evidence to the judge to say we should be entitled to discovery on the issue of the corporate veil, right? Then what is the court going to look for? Well, the court is going to look for primarily commingling of assets, right? So if you have been lax with your accounting, if you're using the corporate, the LLC for personal stuff, right? If you're not keeping good accounts, that is the kind of stuff that the court is going to look for and say, okay, this is not really you're not treating it like a separate entity. You are just
you're one of the same.
You're just you and the corporate entity are one and the same, and it's piercing. And now, what are the kinds of things that will create evidence that you and the corporation are one and the same? Well, it's doing all the stuff that those gurus who tell you to get an LLC tell you to do, because they're telling you, oh, go get an LLC because now you can commit tax fraud. Essentially, they don't call it that. They're like, oh, there's all these tax advantages. You can do this and you can do that with your LLC. You can take trips and you can own your car and you can do all this kind of, buy your personal car with the LLC and deduct it from your taxes. And like, that's the kind of stuff that it's precisely the stuff that the courts are looking for, right? To see if this is a sham LLC or not. If you've got the LLC so that you can try to get over on the IRS, well, buddy, you've just gone and exposed yourself to a very good piercing claim, right? So have the LLC and just do the right thing, right? Keep your account separate, account for things properly. If you have like an accounting firm doing bookkeeping for you, right? Like that's like great fact, right? That's going to really, if you're filing your taxes properly for the LLC, like if you're doing the things that you're supposed to be doing, it is going to be almost impossible for the courts to pierce the corporate veil. And I have literally litigated cases because for certain kinds of cases, there's always a corporate veil piece. Like basically anytime there's like a case against like some company owner, there's always like, because they want to try to go after the guy's assets. I saw this time and time again. And the court cases that I've read on this issue, I mean, the facts that you see in these court cases, there are like court cases where they were pretty fast and loose with the LLC or the corporation, but they did the bare minimum and the courts are like, that's all they need. As long as they've done the bare minimum, it's a separate entity. And the bare minimum is essentially like keeping good accounts, right? Filing your taxes, keeping your franchise tax paid, which is like $25 a year or whatever it is. Like if you've done those minimal things, right, then you're going to be fine. As long as you also haven't done, like you haven't bought your personal car with the LLC, you haven't gone and, done all these trips. Like people are saying like, oh yeah, make your wife a director of your LLC and then go take a trip. And that's where you can hold your corporate meetings. And don't do that stuff, right? Don't, as long as you don't try to get over, you'll be fine. But it's important to have good records and do it the right way. So as long as you do that, right, the LLC is going to be fine. It is not going to be pierced. It doesn't matter if it's a single member or a multi-member LLC. I mean, believe me, wealthy families use these LLCs all the time.
Right.
Many of them are single member LLCs because if it's a single member LLC, then you don't have to file separate taxes for that. It's a pass-through, right? But it still gives you the limited liability, right? Do you really think that if a single member LLC was worthless, that billionaire families would be relying on single member LLCs to protect their assets if they were worthless? I mean, it's just preposterous, right? So don't believe those. So don't believe the gurus on either side of this issue. The gurus who tell you, I mean, these are like symbiotic, right? The gurus who tell you like get an LLC so you can get over, and then the gurus who tell you LLCs are worthless because they'll be pierced. Are actually the flip side of the same coin, because the stuff that the get over guy, precisely the stuff that the get over guy is telling you to do is the stuff that the plaintiff's attorney is looking for to pierce the corporate veil.
Exactly. No,
so
I agree.
Ignore both of those people, get an LLC, as Michael said before, do a cost benefit analysis about how much you should put within the LLC, how much you should keep outside the LLC or in a separate LLC, and just keep good records and you'll be fine. And and it will stop a loss that exceeds your insurance coverage, right?
Absolutely.
So, end of rant.
Yeah. So let me just kind of summarize for folks here in the kind of residential space, right? So again, the LLC is, again, I liked how you said it in the very beginning. It's two pieces of the same thing, right? Insurance is still good. Umbrella insurance is still good.
You need insurance. Yep.
Not where it's, some people look at it like one or the other.
It's not.
It's not. It's both, right? It's the yin and yang, if you will. Second, I love the fact that you brought up how veils get pierced, right? Because again, a normal, owner of houses hears that. It's like, well, I don't want that. Why have all this expense if I'm going to lose anyway? Right? That's what they hear. And then you talked about the things not to do. That was very important. Because again, I hear it all the time. And oh, get the LLC and take vacations. Oh, do this, do that, do this. It's like, you're like giving somebody, the recipe to pierce it. It's kind of bad.
Yeah, and that's frankly why I think when they do get pierced, it's because it's the get over people who do that stuff, and then they get pierced.
It takes work, right? You're running a business, folks. That's what an LLC is, right? It's a company, limited liability company.
If you are not willing to run a business, you shouldn't be in business. Right?
I like that.
Right?
Yeah.
I mean, seriously, like you're talking about I mean, frankly, I don't think anybody listening to this podcast is really part of the Get Over crowd because of you and I, the folks that we attract. But frankly, like if somebody's just found this channel and you're like in the Get Over crowd, like, when you want to do everything on the cheap, like this isn't the business for you.
Oh,
And frankly, there is no business for you except, I don't know, like, some get rich quick scheme on the
exactly.
internet. Or
Bounce
something.
around. Yeah, exactly.
Yeah.
So Jonathan, how can people find you? You have an amazing Facebook group with that you're very active with. The team out there is great. What is that?
So yeah, multifamily investment community, just search for it on Facebook. And there's a couple of questions you got to answer just to make sure that you're not going to spam us.
Yeah.
So, which, still happens in spite of my best efforts, but just, ask to join and you'll be in. And if you would like to invest with me, we do have some ongoing stuff. If you are an accredited investor, you can go to Two Bridges Asset Management. Just Google it. The URL is too complicated. Just Google Two Bridges Asset Management, and it'll come right up. And then last but not least, if you would like to learn how to buy apartment buildings the right way, you can go to multifamilylaunchpad.org/join and see the offerings there for my programs.
Very cool. Thanks, buddy.
Yep.